Well, thanks everybody for joining the Profoundly group chat here. Appreciate you taking the time. We have a really important topic today and an awesome guest. We're joined by Mike Perna, who is a certified public accountant, a chartered financial analyst, and the founder of Flying Point Advisors. Mike has been a friend to lots of solopreneurs and freelancers and partners, you name it. He's also been just a really great advocate and partner to the Profoundly community specifically. Huge friend to lots of us, including myself. Lots of great advice and support along the way. So, Mike, we're really happy to have you here today. Thank you so much for taking the time to talk with us.
Oh yeah, yeah. Thanks for having me. This is great. It's
Awesome.
fun to talk to the group.
Yeah. We've got, our goal is to keep this really conversational. We want to dive deep on, things that are pros and solopreneurs and partners kind of are thinking about and getting wrong. Again, we want to keep it conversational. We're not going to dive deep into sort of the tax code. We're here to
You know,
share insights and
197A kind of stuff.
yeah, best practices. Like, what are the things that people get wrong and so on. So appreciate you sharing your experience and your insights with everybody.
Yeah.
To kick things off, do you mind sharing a little bit about kind of your journey, a little bit more about your background and how you got here?
Yeah, yeah, for sure. In fact, actually, before we dive into that, I just want to start the conversation. Since we're going to keep this high level as like a little bit of a disclaimer
Yeah.
here, is just to make sure that everyone listening to the call, right, this is a high level conversation, and nothing that we discuss here should be considered, individual tax advice. Like, I'm not telling you to do things, and you can't later then go like, well, that Mike Perna guy said go do this. Nothing should be construed as like investment advice. This is informational only, conversational topic. And so I just need to make sure that we get that out of the way.
100%.
But with the accountant's disclaimer.
Yeah.
So I started my financial career. Actually, my first job out of school, I sold beer for the Harpoon Brewery. So this is sort of a departure from where I am today. But I really kind of got started in the financial path. I worked as a fund accountant at State Street, which was one of the worst jobs I could possibly imagine. It's like cubicle farms of just
Yeah.
crunching numbers. But really, I got started. I worked at Merrill Lynch, sort of on and off again for about 10 years. I would work there for a couple of years, take a break, go do something else for a summer, then come back. And
Yeah.
and so I started off in their wealth management group, and then quickly went down more of an analyst track and portfolio manager. And by the time I left, I was working in the private banking group, which is just wealth management, but for sort of ultra high net worth clients. So it's all like 100 million plus, like these just giant clients, all these CEOs and sort of public figures, but dealing with them like not as an investment banker and with the company like on a human level. So it's sort of fascinating work because you're dealing with someone with sort of like more money than you can kind of fathom. But
Yeah.
meanwhile, you're still talking about like funding kid college and what do their kids do at the soccer game, and is great because they have the exact same concerns that all of us do, just a lot of extra zeros in their bank accounts. So I did that for about 10 years, and then at the same time, like the tech boom was going on, and it was all startup central in Boston, and I was ready for a change, and I left Merrill and I joined the startup world and sort of hunted around and did a couple of odd jobs for a little while until I landed just randomly at the Wanderlust Group, or what people would know it as DACWA.
Yeah.
I was the first financial hire there. They had posted a job for a controller, but like they were too small. They didn't need a controller. They just kind of needed someone who could get in and know financial stuff and help build this company. And so I was there, ended up being there. I was there for about 8 years. As employee 10, we grew it to about 120 employees. We had
Yeah.
employees in 25 states, and built this whole platform for sort of marina management software. So it was fascinating. But
Yeah.
after 8 years, it was great. It was really fun to build a company. I was kind of itching to go back to private client and have my own clients. And you can't go from a tech startup like back to the investment banking world. Like that's just not going to work. And so it was time to put up my own shingle and start my
Yeah.
own business.
Yeah, that's awesome. And I think like DACWA, for anybody that may not be familiar, like it's a marketplace, right? It is sort of an exchange platform, much like Profoundly.
Yeah, yeah. We started initially. The idea was it started off as like slip booking app for, if you, hey, I'm in Boston, I want to go to Martha's Vineyard for the weekend, and people could, book their slip.
Yeah.
But it ended up growing up. We built, marina management software and became like the operating system for so many marinas and this integrated network. By the time I left, we were working with well over 1,000 marinas across the United States, and a couple 100,000 boaters had used our software. And the platform continues to grow today. So it was really cool to be part of.
Yeah, that's incredible. That's incredible. Awesome. Well, so we've got a bunch of folks on the line and in the community that are thinking about like starting something on their own, either sort of striking out and going solo or starting a company. For folks that are thinking about that, one of the first questions that crosses everyone's mind, I think, is like, what should they be thinking about from a financial perspective? Any insights, like for those folks that are early in their journey, thinking about doing something? Any thoughts that you would
Yeah.
share with them?
Yeah, I think like from like a sort of service provider's perspective, right? It's
Yeah.
when you're starting out, you don't have to have every single piece worked out, but the better you have a sense for kind of like what you want the first couple of years to look like, the better. Like the more people can help you. When people just sort of say, "Oh, I got this idea. I want to start a business. How should I do it?"
Yeah.
It's really hard for an accountant to give you advice, for a lawyer to give you advice, because the answer is, well, you can do it however you want. And so the better you can kind of codify that idea in your head into that simple, like, here's how I'm going to make money. Here's this, in my wildest dreams, here's what 3 years looks like. Here's how big I kind of want my company to be. Here's generally what I want to sell. It's going to change a million times once you're in business. But if you have a structure from the beginning, or at least an idea, people can really guide you and get you the right resources and make sure that the advice that you're being given fits with where you're trying to go.
Yep. Yep. Do you find that folks that are thinking about those things in the early stages, like that come to you, are they coming to you with like a business plan generally, or like how do they capture those thoughts?
Yeah, it's a good question, because the idea of like the old 30-page business plan that you would have done
Yeah.
in like an MBA program or something like people don't really, I don't feel like people really do those anymore. And they might be overkill, to be honest. We live in a world that's so fast paced that, by the time you've written some 30-page document, you can already like toss it out.
Yeah.
Um, I find that there's like some people come with barely an idea on the back of a napkin,
Yeah.
uh, which is great. You got to start somewhere, of course. But
Yeah.
like before you can get sort of the that business professional community involved, like you need a little bit more than that.
Yep.
Otherwise, the answer is always going to be like, well, go sort it out a little bit more, or you're just going to end up like racking up a tremendous amount of fees with
Yeah.
service providers for not a lot of specific advice.
Yep. Yep. So it sounds like early on having a sense for like, what do you want this to produce for you, or what do you need this to produce for you, and
Yeah,
how do you see that playing out?
because there's really no wrong answers. It's your
Yeah.
business, right? It's
Right.
perfectly legitimate to say, hey, I want to build a business that is just me, and I want to have something that supports my lifestyle. And honestly, I want to work 30 hours a week.
Yeah.
Great. There's a whole path for that.
Yeah.
Or you might say, no, I want to have 1,000 people working for me, and I want to go public in 5 years, and have great. There's a path for that as well. But
Yeah.
if it's like, well, I want something that could be either of those, you know,
Yeah.
good luck.
Yeah. Yeah. Got it. So it benefits everybody to spend a few minutes really kind of defining like, what do you want this to be? This is a lifestyle business, or you're trying to scale an organization and so on. That makes a ton of sense.
That's right. And there's no wrong answers to that. It's
Yeah.
just the more you've thought about it, the better people can guide you.
Yeah, makes sense. It actually relates to kind of my next question, which is something that we wrestled with, right? And you were instrumental in this. It's just like how one should approach thinking about the structure of their business.
Yeah.
Should it be an LLC? Should it be an S corp? Should it be a C corp? Like, how do you, if like I know what you did for us, how do you approach those conversations with folks when they ask you?
Yeah, it's good. And this is one of those things we could easily spend like hours on this topic. So we'll try and keep it pretty reasonably quick. Again, it's that the more someone can tell you kind of what they have in mind, people can help match the entity. Like and there's a difference between there's a legal structure and there's a taxation structure, which aren't always the same, and there's weird overlap. And it's An LLC over here means one thing and it means a different thing. But like we can help you match the vehicle to where you're trying to go.
Yeah.
The beauty of business and accounting and legal services, there's almost no problem you can create that can't be solved with a checkbook and some paperwork.
Yeah.
But obviously, you want to avoid like having to bust out the checkbook as often as possible, right? If we can get it
Yeah.
right the first time, it's a lot easier for everyone. Um, but I think that in general, I try to coach people towards picking the entity that is going to be the simplest to administer in terms of getting where they want to go. And each entity is going to have sort of pros and cons, and there are reasons why what might work over here this way, and a C corp might be the right vehicle for this company, and an LLC might be the right vehicle for this company.
Yeah.
So, I mean, obviously, the simplest way to start is as a sole proprietor slash LLC. And just quickly, in a legal sense, an LLC is just a wrapper
Yeah.
around your business, right? It puts a little bit of like a separation between you, the person, and the business, right? So if you screw up, someone can't sue you for your house and like everything that you own. They can only
Yeah.
go so far, at least theoretically,
Yeah.
as the LLC is concerned. From a
Yeah.
tax perspective, an LLC can be treated a bunch of different ways. So don't confuse the two, right? So like if it's just you from a tax perspective, it's no different than a sole proprietor
Yeah.
ship. If it's a couple of you, you can choose to be taxed as a partnership. You can choose to be taxed as a corporate. There's a bunch of different ways to go. So like matching legal structure and matching tax structure are two different paths. Granted, some of them aren't going to be the same. A C corp is a C corp is a C corp.
Yeah. Yeah. I think just for folks on the line, I think one of this is one of the areas that you were instrumental to us as we got profoundly off the ground is maybe we didn't have all of those initial conversations that we should have had or documented what we should have documented in terms of like where we saw it over, 3 to 5 years and being self-critical. I think that resulted in us like starting one way and then realizing shortly after we got started and took out the checkbook, we should have gone a different way. And to your credit, you had advised us correctly from the very beginning. We just didn't listen. So,
That's right. We got there in the end.
yeah, we did. We did.
I think that like especially when you're getting going, there's this urge to want to just move things forward and like, all right, cool, entity formed,
Yeah.
bank account open, I'm making progress. And sometimes slowing down a little bit longer to have those I mean, in theory, this entity is going to be around for years.
Yeah.
Right. So what's another month to get it right?
Yep. Yep.
Like I know it feels like, oh, the business opportunity might be sliding. I got to jump right now, but probably not.
Yeah.
Like it take that extra time to get your ducks in a row and feel good about the decisions you're making and again work with folks who can give you the guidance you need. Don't listen to TikTok or whatever the like structure du jour is on the various financial influencers.
Yeah.
Some of those guys.
I mean, not that would, but I would say like, um, well, the other thing in my experience and our experience was like, sure, you could fit a square peg in that round hole if your checkbook is big enough. It's like, and you rightly were like, no, that's not how you should do it. And we tried, and so good to get it back on rails with your help.
There are definitely certain entities that just work better for doing certain things, right? Like
Yeah.
if you have dreams of doing a bunch of fundraising and bringing on venture capital money, the correct answer is a C corp,
Yeah.
right? Like 99 times out of 100. Now that comes with a lot of administration, it comes with a lot of bells and whistles, and it is a much bigger entity. And it's not an easy beast to wrap your hands around,
Yeah.
right? So like that's got to be taken under advisement. Like a C corp's not something you're going to like just sort of like casually administer on the side of things. So we've also um, but likewise, if you don't have those kind of big aspirations, a C corp might not be the right structure, and there's probably a simpler way to go about it. So
Yeah.
it's making sure that you're matching administrative burden to where I want to go.
Yeah. Yeah. And you were also really helpful in understanding like the tax consequences of doing those things and like withholdings and all of that. So For those that are on the line and in the community that might be a little bit, might have already started or be a little bit further down the path, like what are some of the common financial or tax mistakes that you see solopreneurs or partners making?
So I'm going to say this in like the most non-self-serving way that I can.
Yeah.
But one of the things I see is the solo entrepreneurs or early stage, you know, business owners not getting an accountant involved early.
Hmm.
Obviously, when you're first starting out, you're not going to need tens of thousands of dollars of accounting work, but there's no reason that the typical business owner is going to be well versed in accounting, right? It's this weird language that unfortunately every business in America has to deal with. Like we all have to file taxes, and there are correct ways to do these things. And so you see a business owner that is really, really good at whatever it is they're going into business on, and accounting ends up getting treated as an afterthought.
Hmm.
And then you fast forward 18 months and you go, oh, there's some mess in here. And like to untangle a year or two or even 3 years worth of bad habits can be really expensive
Yeah.
and can really set people down the wrong path. So the sooner the sooner you get a professional involved, like probably the better off you'll be. And again, that's not to say that you need to go and hire Ernst and Young to like day one, let's get a $50,000 audit done or something like that. But like have partners in your stable that can take care of that accounting language. Because you figure all the time as a solo entrepreneur that you're spending wrestling with QuickBooks and wrestling with tax forms and all these things that you don't know a lot about, someone else has done a million times is going to do it way faster. That's all time taking away from you focusing on whatever your actual business is.
Yep. Yep.
Um, and I see a lot of times like it'll be, oh, well, I know a person whose cousin knows a thing or two about bookkeeping, and you're always like, oh
Yeah.
God, yeah, that's gonna be a mess to untangle later.
Yeah. Yeah. Makes sense. When it comes to like here we are, right? April 1st, obviously tax season in the US. Like, what are some of the things that you see like that are surprises, common misconceptions, or like missed opportunities that you see come through from?
Yeah. A couple of them, like one you see people coming in at like April 1st being like, all right, here's my shoebox of receipts. Can you do this?
Yeah.
Nope. Well, I can, but not by April 15th. Like get in line.
Yeah.
And you're probably going to get an extension filed. And that's okay. There's nothing wrong with getting an extension filed, but like recognize that accountants, like we have a bunch of clients that we're working with at the same time. So the sooner you're working with a professional, the sooner they can work with you ahead of time and get out in front of tax season, right?
Yep.
Because it is hard to fix something like way after the fact. It's much easier to get out in front of it and say, hey, let's do this before year end. But once it's year end, we're kind of like, well,
Yeah.
that's a little hard. We'll solve this one with a checkbook.
Yeah.
I think the other thing that you see a lot of, like, it's like a misconception is that like accountants have these like crazy tricks that we're just going to like all of a sudden, evaporate your tax liability or something like that, which is like not at all the case. If anything, we're going to make you play by the rules, and you might be surprised. You're like, ooh, I didn't know that was gonna. I didn't think I was gonna get attacked. You actually made it higher than I thought it was. You're like, well, sorry, those are the
Yeah.
rules.
Yeah.
Um, you see, yeah, I like the like. This is again. I think it must be coming from somewhere from TikTok or something like that. This belief that I like just by nature of having an LLC, suddenly, oh yeah, well, like my entire life becomes tax deductible at that point. Like, no, it couldn't be further from the truth.
Doesn't work like that.
Uh,
Yeah.
yeah, so we see a lot of that this time of year. It's like kind of funny.
Yeah. Oh, one of the things that we hear a lot about, I think, from members of the community and new joiners and so on, are like the quarterly contributions.
Oh yeah,
You
yeah.
know, can you share for folks that are on the line and listening, what's that all about?
Yeah, and I think that's a really easy place for the new business owner to kind of get tripped up or surprised. It's because especially if you're coming from the world of a W-2, well, every single time you get paid, taxes get pulled out of your paycheck, and great, I should have gotten whatever it is, and then I lost a bunch of money to the IRS. We all bemoan that. But what ends up happening? So if you think conceptually, of what's happening at this point is you're paying taxes all the way through the year, then when you do your tax return, you're really just settling up with the government. So you're sort of saying, hey, I gave you this amount over the year. Here's a bunch of things that happen. So if we do this math, the total tax bill should have been this. So whatever the difference between you already have versus this, either I'm going to owe you some money or you're going to owe me some money, right? Like that's all you're doing with a tax return.
Yeah.
So the same concept applies to a business owner, right? The IRS doesn't want to wait until the end of the year to get their money. They expect to be paid throughout the year.
Yeah.
And so quarterly taxes are a very imperfect system, but that approximation of saying, hey, you're paying taxes throughout the year so that we're not sitting around waiting until year end. And we kind of want our money, we being the IRS, want our money as you earn it.
Yep.
And so that quarterly tax process conceptually is like fairly simple, like pay them periodically money. In practice, there's like all these shadow calculations that get done to figure out what the right number should be. And there's different practices. Some people want to say, hey, I want to give the government the bare minimum throughout the year so that I have no penalties, but I'm going to end up owing them a bunch of money come tax season. Other people say, I don't want to pay any money come tax season, so on. So it's a matter of helping people fine tune those estimates. The most important thing is, one, pay them. A couple of years ago when interest rates were really low, you could kind of get away with saying, whatever, I'm not going to pay these and I'll just settle up later. But now there's like an 8 and 10% interest rate on it. So like you can get hit with a penalty plus this interest. And now that tax liability just went up considerably. So it is worth paying them, but don't fret it. Like you're not going to go to tax jail because you didn't get your estimates perfect or you didn't make one for a quarter. The goal is pay what you can, be reasonable about it, work with someone who can help you come up with that number. And you'll get most of the way there. I wouldn't spend hours though trying to get the number perfect because you never will, especially as a business owner where things change a lot.
Yeah, makes sense. As folks are trying to sort of gauge, with help, hopefully, but as folks are trying to gauge what that quarterly contribution should be, what their tax liability should be, the topic of like what's deductible comes up a lot.
Yeah.
Can you give us like in plain English, like a rundown of what's fair game and how people should think about that?
Yeah, and that's it's a really good question, especially for the business owner, where it's if you're a small business owner in particular, your personal life and your business life are like kind of hopelessly intertwined. And so it can get a little murky as to what is deductible and what's not. And I think, and I say that with like 95% of the time, people are trying to do the right thing and just, I don't know, 7,000 pages of tax code. Like they're not experts on it. There's not like a nefarious thing going on here. It's just a misinterpretation of tax code. And then there's always going to be people who are trying to like really throw one, slip one by and like, get one over on the IRS. So generally, if you think about it from a business perspective, like conceptually, the tax code's not actually that crazily complicated. In practice. It's nutty, but like you as a business owner are entitled to deduct reasonable business expenses. If it costs you money to generate money, that's probably deductible. Now, yes, of course, there are a million caveats to that and like rules on how specific things get deducted. But in general, if you think about that, you go, okay, is this a reasonable expense in the process of doing my business? And like reasonable is an important word.
Yeah.
And I think it's funny. A lot of people confuse precision and accuracy when it comes to tax and accounting, and thinking that it matters. Like, oh, I got to make sure it's like $428.07.
Yeah.
As opposed to saying, is it directionally correct?
Okay.
Right? And that's what's more important. And the IRS is a weirdly reasonable, giant bureaucratic machine, right? As long as you have a reasonable approach to how you're doing things, you're probably going to be okay. So when you think about like reasonable business deductions, I'll use myself as an example, right? Like cars are a great one. That's one where you see things can get a little funky, right?
Yeah.
So I work out of my home office most of the time. I have a car. I don't have a specific accounting car, like a Flying Point Advisors car. I have my truck, and occasionally I do drive to go and visit clients or go to meetings and whatnot. probably 90% of my car's usage is dropping kids off and like going to the grocery store. So if without even getting into complicated calculations, I can just know like conceptually, hey, is it reasonable to try and put 100% of my truck expenses through my business?
Mm.
Nope. Right? Like it doesn't take a CPA to get like that. That doesn't sound right.
Yeah.
Right? We know that some amount of my truck is deductible. And
Yep.
then like there's a million ways that you can come up with what proportion of my truck is deductible, but saying 100% is probably not a reasonable approach.
Yeah.
Likewise, right? Like, hey, I took a client out for lunch. Okay, great. That's reasonable.
Yeah.
I took a client to like this crazy lavish dinner, and we spent all this money at bars. We spent all this stuff. We did an entire liquor business. We went to the baseball game. All this, like explain how that's related to generating revenue. You're
Yeah.
like, I get it. You're kind of entertaining your client, but really you were just having fun, right?
Yeah.
That's that like the where you just be reasonable about what's deductible.
Yep.
If you find yourself as a business owner going, when you're trying to think as to whether something might be deductible, the answer is probably not, right? Like the
Yep.
minute you have to start to think like, how does this like, well, if it's, I can make the like, great, you've probably overthought this and you're now playing in a gray zone. Whereas
Yeah.
if you just say, oh yeah, printer paper, it's for my printer. Sure, my kids print on my printer occasionally, but I'm not going to need to like go and like, oh, 7 pages went out of my printer. I better account for that.
Yeah. Yeah.
Um, I know that's a pretty general question, but like the other thing is if you're not sure, and this is the benefit of working with an accountant, if you have a question about something, just ask,
Ask.
right?
Yeah.
Better to ask someone and get a straight answer, even if you don't like the answer, than for someone later to have to go like, hey, like this isn't right. You, I'm
Yeah.
going to assume that I'm going to assume good intent here, but like not right, and we're going to have
Yeah.
to that.
Bunch of red flags. Yeah, that makes sense. I know we're creeping up on time here, and I want to leave time for folks to ask questions. One last one for me, I suppose, would be retirement
Yeah.
and sort of how, solopreneurs and founders and so on should be thinking about saving for retirement or planning for the long term. Any advice for folks who are doing that don't maybe have a traditional 401k, perhaps?
Sure. And it's especially when you're early stage in a company, you see I'm gonna answer this in a couple ways. Make sure when you're kind of thinking through your business planning that you put in payment for yourself, right? You can't
Mm.
just treat yourself as this zero because like, oh, I'll just like work for free indefinitely. Like your business doesn't work that way. So even if you're not necessarily going to pay yourself right off the go, you need to remember that you need to get paid. That's a real business expense. And you also have to take care of yourself because if your business isn't generating the cash flow for you yourself to get through life and to take care of whatever it is, like that's not a viable plan.
Yeah.
Um, with that in mind, there are a tremendous number of retirement vehicles available for the small business owner. Right, we get used to having that 401k when you're at the big company, but actually the exact same thing exists for the small solopreneur. It's just a little. It's like not quite as clear and like
Yeah.
easy because like someone's not doing it for you, and it's not just like I don't know. I just pick a number and it goes into my paycheck. But there are solo 401k plans which are great. There's things called SEP IRAs, simple IRAs. You can always make contributions to your personal accounts. And with a little bit of planning and foresight, there's actually fantastic opportunities for business owners to put a tremendous amount of money into these plans, more so than you would be able to do in most employers.
Oh,
So you
interesting.
can, given given some math, you can put, what is the number this year? It's like $70,000 into a solo 401k, 70,000 and change or whatever the number is. It changes each year, but
Yeah.
I don't know if you guys can hear it. My dogs are going nuts in the background. Someone just pulled up into my.
Yeah, all good. They are fans of retirement plans.
Yeah, so and that's all part of tax planning, right? Like your accountant is going to work with you to figure out like, well, how much can we contribute? Because there's benefits to you, not only you getting the money in there, but it's also going to decrease your tax liability. It's going to decrease your business's tax liability. So there's a lot of ways to creatively put money into various accounts. And when I say creative, I don't mean like dodgy creative ways.
Yeah,
I
yeah.
just mean there's lots of tools at your disposal, and it's not realistic that a lot of people would be able to navigate that world,
Yeah.
just like on their own.
This is awesome. I've got a million more questions, but I want to make room for others that are on the phone. Um, for any of the audience members who have a question, feel free to come on camera and unmute and ask Mike for his thoughts.
Hi, Mike. Jeanette, nice to meet you. And thanks for talking to us. One of the questions I have is LLC versus S Corp. Can you kind of give us a quick rundown of what the differences are between the
For sure.
two?
Yeah, and that's a really common question with the smaller business owner, and it's there are pros and cons to both, and you shouldn't feel like you have to be in one or the other, right? But to start with, the S corp is a tax treatment. An S corp isn't a thing. There's no such thing as like an S corp entity. It is a tax treatment of either an LLC or a corporation, right? So you form this entity, right? That's that legal structure. So I've decided I'm going to form an LLC or I'm going to form a C corp, and then I make the election to be treated as an S corp. So that's a tax filing that gets done. The quick answer is where the S corp is really advantageous to a small business owner is that when you have a single member LLC or a sole proprietorship or a partnership, straight partnership, all the profits of that business are going to get taxed to you as both income and subject to self-employment tax, right? And that self-employment tax is your Social Security, your Medicare, and your what is it, the FICA taxes. It all adds up to about 15.3%. I mean, there's thresholds, and for all intents and purposes, 15.3%, right? That's that part of your paycheck when you have a W-2, right, where you see like there's the income tax, and then there's some other stuff that comes out. And what you're not seeing is the employer is also paying tax on that, right? So you, as the sole proprietor, have that entire burden, and I think that catches people off guard when they go to do their taxes because they go, oh, whoa, that adds up real fast, that extra 15.3%. So in an S corp, what you end up doing is, and you can have an S corp for a single person, you can have an S corp for 10 people, you can have an S corp, you can have giant S corps. What an S corp does is it says it's like this funny middle ground between the sole proprietorship and the C corp, where it says, hey, I as the business owner, I'm going to take a salary, I'm going to take a reasonable salary like a W-2, and I'm going to have payroll, and I'm going to pay myself a paycheck, and there's going to be taxes withheld from it. And I'm going to go about my business. I'm going to run my business, and I'm still going to have a profit at the end of the year. But that profit is going to get pushed to me. It's still going to get distributed and taxed, but it's only going to be subject to income tax rather than that whole self-employment tax, right? So you can kind of cut out 15% of taxes on a portion of your income. The caveat there is that you have to pay yourself a reasonable salary, right? The IRS is like wise to this. Like the temptation is to be like, oh, I'll just be an S corp and not pay a salary. Boom, no more. And they go, no. That's a real quick way to run into trouble. And they will look at it and they will say like, hey, this isn't reasonable. Like you have to have some employees. And there's a whole song and dance around like what is reasonable salary. The quick answer is like, well, what would I hire someone to do? Like, and obviously if your S corp is making $1 million, you don't have to take like a $700,000 salary, but like you have to be reasonable in this. Don't dodge the IRS. The other thing that about an S corp is there's administrative overhead to it, right? It is a more complicated vehicle. So now you have to run payroll. It has to file its own tax return as opposed to just kind of rolling up onto your personal taxes. So you end up, when all is said and done, depending on the size, you get, definitely got a couple $1,000s of accountants, lawyers, software, QuickBooks, and things like that. This is real rough, right? Like, and this is circumstantial. It's going to depend on each person, business, and their own taxes. But it starts to be a vehicle that is kind of worth looking at if you have an LLC, if you're making more than $100,000, the S corp is going to start to be potentially attractive, and it's looking at that like, hey, where's the break even on this added administrative cost versus the tax savings, right? Again, that's a function of like, well, what's a reasonable salary for yourself, right? That is a function. It's not just of what your business makes, but also the field. So like you can't be a doctor and say, my reasonable salary is 30 grand. It's just not reasonable.
Yeah.
So that's like an S Corp in a nutshell, but it's a great vehicle. It comes with some extra bells and whistles, and I think the typical owner can be surprised by what needs to happen to get to the same place.
Yeah, sounds like it. Thank you. Appreciate it.
Hey, Henry.
Hey, Mike. Hey, Brian. I was actually going to ask that question exactly. What is the revenue sort of threshold to make the S Corp worthwhile? This has obviously been something I've been exploring a lot the last month for the first time, solopreneur, first year getting after this on my own. I've heard a lot of conflicting things, kind of like from 60 to 100. It sounds like 100 is definitely like the safe net with
the reason it's conflicting because there are situations where at 60 it makes sense, but it's going to make more sense the more money you make, right? So if you're doing north of 100, it's far more likely that the math's going to work out in your favor. That's like when you're close to that threshold, the difference is don't lose sleep over it. Don't agonize over whether you should be an LLC or an S Corp. And at best, it's a little bit different one way or the other. If it's a little bit more expensive to be an S Corp 1 year, fine, call it a training year. If it's a little bit more expensive to do the LLC, okay, fine. Don't, but you'll know that it's better if you're making a lot of money. Again, it's the other thing it's a great reason to work with an accountant is to figure out like, hey, here's why we think it makes sense, yes or no.
I actually had the question I really wanted to ask was, so I am working with an accountant. He has a CPA, he has his MBA, right? So I have all this faith in the guy, but I've been asking a lot of different people when it comes to, so I work from home, home office deductions, right? He's telling me to do 100% of things like internet, phone, kind of moving some numbers around, like for a vehicle repair that he turned into get mileage that I have no support of. So I'm like, it made me skeptical. So I have people who are telling me do the 100%, but like as you said earlier, in my head, obviously my internet is not 100% for business. I use it for personal stuff. My phone is not 100%. So what's kind of your take on doing the 100% for those two things specifically, and then I do the whole square footage calculations for the rest of it?
So everyone's going to have their own opinions on what's reasonable and what's not. I probably tend to be a little bit conservative on the side of like let's not be aggressive. That kind of sounds funny. I probably play the line like very close to what the rule book says, and I would much rather not spend a bunch of time dealing with the potential of a problem and just focusing on growing the business rather than trying to squeeze out like the extra like $17 of tax optimization. But that's my opinion, right? Like not everyone's going to feel that way. Some people really like to, get as close to what is reasonable as what is reasonable as they feel comfortable. It is ultimately a judgment call. The only thing I would say is that because of the way our system is set up, the likelihood that you get audited is so small. And I think people just treat that as, oh, I can do whatever I want. No one's ever going to check. They're already calling this year for like $500 billion worth of less tax revenue because people are like, they're never going to know. They fired all these IRS agents. So like, there's not even staff to check this stuff, right? You can take that risk. You can play that game if you want to. I would rather personally just play by the rules, play by the conservative version of the rules, and put the numbers that help me sleep at night and not like worry about did I get, what is 100% of your internet versus the reasonable allocation when we're talking like, a couple $100 worth of tax deductions versus, cool, I slept. I didn't do anything that is questionable here. That's my own opinion. Other people feel differently about that.
Is that a concern to then start looking at other accountants, other CPAs, right? Because I align with your perspective of I like to stay within the rules, within the confines, be conservative. We're talking about saving a couple bucks here, right? So, but if my accountant is advising me on stuff that I'm questioning, is that justified to consider other options, or am I?
I mean, you as a business owner are always justified in working with, changing whatever service providers you work with. Ultimately, you should be surrounding yourself with people that you're comfortable, that you feel like have your best interest in mind, and that share your opinions on things, right? So if you have a lawyer who's telling you to do things that you don't like, don't work with that lawyer, right? There's nothing that like obligates you to any one service provider, and everyone's going to have their own style. Everyone's going to have their own, fee structures and ways they do things and what they think is important. And ultimately, you as the business owner get to pick who you want to work with and who you think best represents you. So I'm not going to tell you to fire your CPA, but if it doesn't make you feel good, go find someone else, right? Because that's someone who you should feel really good about, at least in my opinion.
Yeah.
Thanks, Mike.
Thanks, Henry. I know how much we've appreciated having you, Mike, as a partner to the business, and also thank you for joining here today and sharing your insights. We're I can't believe up on time here. For folks that want to follow up with you and follow you, like, is there a best way for them to stay in touch?
You guys being all the HubSpot marketers, right, would laugh. I don't really do any social media because, one, I don't know how to, and two, it terrifies me. So you won't find me on any of those. I do have a LinkedIn page. I don't ever post anything, but you're always welcome to find me there. My website is flyingpoint.cpa. Again, I don't post a lot of content, but you guys are always welcome to check it out. You guys, my email is mike@flyingpoint.cpa. Brian, feel free to circulate that. If you guys have questions, feel free to reach out. Get you kind of pointed in the right direction there.
Sounds great.
But yeah, I don't do a lot of social media, despite believe it or not, there are actually accounting influencers out there.
I believe it. I believe it. Well, I don't know. I know some great pros here who could help, Mike. So it might be in your future. But we know you've got a ton going on here in April, and you got a lot, to do. So we won't keep you. Thank you so much for being here and for sharing your insights and connecting with everybody. We really appreciate it.
My pleasure. Thanks so much for having me.
Sounds good. All right. And to our audience, thanks so much for joining and for participating. We'll talk to you soon.
Take care, everyone.